I think with BOJ or the yen, basically, first of all, we need to see what inflation is doing. Is inflation high enough for them to start being worried and think about raising rates? Obviously, we got the CPI today. It doesn't really point in that direction. It's sort of moderating somewhat. We look at wage inflation, again, seems to be moderating. Real wages are negative. So putting all of that together, it seems like, for the BOJ to move from negative rate policy into positive seems really unlikely at this stage. YCC is a different story altogether. Of course, they've taken steps over the past, I would say, since December last year. And what we have seen is that, we do expect them to abolish YCC at one point in the near term. Timing is a little bit, we can't really pinpoint, but effect on yen, I mean, whether it was December or the more recent adjustment, the adjustment on the yen was maybe 2-3 yen stronger just on the day, and only to trade towards the weaker end. So what we think is that, again, dollar yen going forward is kind of be moving to the tune of rate differentials, with rates in Japan likely to remain a little bit on the softer negative end, even with yields, probably will be capped at 1%. We think that's the fair value. Don't see that moving any higher. I don't think that's, that's going to help dollar yen strengthen significantly from here. We're forecasting, in the near term, a little bit more weakness, and then over the longer term, just to strengthen, but only marginally. And that's only driven by the adjustment in the U.S. yields, not Japan.
Got it. Mahjabeen, we were talking about the Aussie dollar under pressure after the jobs report. What's your take over here for the dollar?
Look, I think Aussie dollar, first of all, domestic drivers, we know that the jobs market is a little bit in the softer side of things. Things are a little cooling. All eyes on CPI next week. We expect CPI annual measures headline to be around 5.3, trimmed mean to be about 5.1. And then thereafter, we will have a clearer picture of what the RBA is going to do next. Now, we think RBA November meeting is very much live. Recent comments were pretty hawkish. They said, we have a sort of a low tolerance for a slow reversion to that 2% target. So all in all, on the domestic side of things, I think little impetus for the Aussie dollar. I think it's more around the China story. Clearly, we had the GDP, which showed us more positives than negatives, but not enough to take the Aussie higher. I think broadly, then it's the risk sentiment in the U.S. dollar side of the story, which we just spoke about. I think near term, we see the U.S. dollar slightly on the stronger side into year end, which will keep any rally in the Aussie pretty much capped.